Okay, so what's Darby going to be talking to you about today? Well, mainly the idea is to have a strategic plan to build a workers' comp book. Everyone writes the property and casualty, but not everybody is a workers' comp expert. So this kind of webinar will be great for those that are trying to move in that direction and those that want to that want to actually sharpen their tools in the workers' comp arena. One of the things that she's going to be talking about is how to understand writing different sizes of businesses. That's going to be a constant theme throughout this webinar. In addition, she's going to have some great case studies that will really broaden your workers' comp strategies and knowledge. In addition, but last, how about better understanding how to effectively compete? And all of the things she's going to be going over are going to give you a competitive edge in the workers' comp arena. So I'm going to start our first slide here and toss it over to Darby thereafter. So what we want to really talk about is those strategies for building your workers' comp book. And in business in general, you really have to take a helicopter view of what makes a successful workers' comp book. That's like stop and smell the flowers and look at the bigger picture and sort of sit back and look at what makes it. Now, these principles can apply to all business insurance in general, not just workers' comp. So this is valuable information for all the business insurance you write. But the balancing act between small, medium, and large-sized businesses is going to be a very important part of the equation. That's that stepping back and looking down at what a good book mix and how to build a book of workers' comp will be, and it's going to be made up of small, medium, and large. Darby will talk a lot more about this in a moment. And then understanding the underwriting of the different sizes of businesses is going to also give you a competitive edge. And she will go into more detail on that. And then last, presenting value-added insurance solutions is really key, and that will affect the three different sizes of business that we're talking about. And that will help create a competitive premium, competitive edge for successful workers' comp production. So without further ado, I'm going to turn this over to Darby.
Good morning, everyone. So we're going to start off with some strategies for small businesses. So small businesses are the heart and soul of your workers' comp book. These policies are the foundation and are going to make up the majority of your workers' comp book. Small businesses are typically easier and quicker to quote, most of the time receiving a proposal in the same day. Because of this, building your policy in force count is going to be faster. And while a pro of binding small businesses is that it builds your policy in force count, you need to think about the other side of the equation as well, that small businesses aren't going to increase the premium in your book, where medium or large size businesses will. We'll touch on that later, but it is important to incorporate other size premiums in your book. Small businesses are more cookie cutter and they don't require the further underwriting review by the carrier, which is why you're going to get the proposal more easily. They don't have as many exposures, the payroll and employee count are typically smaller, they have a good claims history, and they aren't experience mod rated. So small businesses are your accounts typically categorized under $15,000 in premium. So most of your book should be built on these policies, anywhere from the minimum premium, which could vary from $350 to $750 all the way up to $15,000. Since these are going to be the bread and butter of your book. Much of our book at CID is anywhere from the $2,500 to $15,000 range because these policies are the most stable regarding rate, premium, and renewal retention. So the most important way to get a competitive edge when quoting small businesses is obtaining a fast close. You want to know the carrier markets well, so working with an experienced underwriter who has the ability to go to market fast and efficiently is extremely important. You can always quote with multiple carriers, but there is one that always stands out with the best rates for that type of exposure. So knowing your markets well can quicken the quoting to bind time. Quoting fast and easily with that one carrier who you know has the best rates for that type of exposure makes it easy for you to develop a competitive edge. Another idea is you can also cross sell your package policy to obtain their workers' comp as it creates increased retention for all of your insureds. So we're going to go to some target small business classes. Now, I mentioned rates when quoting small businesses. Rates are the most important thing with small business risks because they don't meet the premium threshold for additional credits. So you got to be smart about writing small businesses and placing them with markets that are the most competitive for that type of exposure. I want to briefly mention a few target classes for small businesses where we are seeing competitive rates being applied. A few are homeowners associations, retail merchants, physician offices, wholesale stores, and auto businesses. A lot of our book for small businesses are built on risks such as these. So it's important to take advantage of the current market to build your small business book with these types of insureds. So we're going to go into our first small business case study. And you're going to want to move through this quickly and quote it fast. So what do you want to be looking for when analyzing a small business? Well, I'm going to walk you through that. So the below points are key factors I look at when analyzing a small business risk. So we're going to walk through on how I would approach quoting this and the important strategies and knowledge I utilize in order to obtain a fast close. So our first small business is a physician office, and it's one of those target class codes that are currently doing well with the carriers. I'm always looking for the entity type, which here is a corporation, so certain documents will be required from the insured when binding. The insured has one California location with 5 employees and payroll slightly over 400,000. Now, I want to bring up an example. I recently had a physician risk, and they had their payroll broken out between class code 8834, which you see here on the slide. That is the physician class, but they also had payroll broken out under 8810, which is the clerical class code. So this will become a big issue at audit because an auditor will classify all of the payroll under 8834. It's important to know which class codes include clerical employees and which don't. In this instance, 8834 does include clerical employees. So if you are misclassifying your employees when the policy is bound, at audit, your insured is going to end up owing a lot of money to the carrier. So if you aren't sure about the classifications of your risk, you should be working with an experienced underwriter who can guide you in the right direction when quoting and binding new business. This insured has no experience mod, which isn't surprising because it's typically not a factor with small businesses because the premium isn't great enough to qualify. There's no claims and they have industry experience, so this is an all-around good risk that I can quote and get a proposal back in the same day. So these are the highlighted points I need when quoting small business. I would take this to the markets that I know do well with physician offices, which in my case would be Hartford, Employers, AmTrust. And I want to mention if this risk were a new venture, I would be looking at it the exact same. So from review of the submission to quoting with the carriers, it did take 1 day. Businesses like this case study are great for building the policy in force count in your book of business. They're easy and fast to quote with the carriers, and they have a great retention ratio. Now we're going to move to some strategies for medium-sized businesses. You can't build a book of business on small businesses alone. So let's talk about what I call the sweet spot. The next stage to consider is writing medium-sized businesses in order to help build a solid workers' comp premium book. While small business help the policy in force ratio, you need medium-sized businesses to help build the premium volume within your book. These types of businesses produce premium anywhere from $15,000 to $50,000. Medium-sized businesses are the ideal premium size because you're staying under the radar of the big insurance retailers that want the business. Because of this, they do generate a good retention ratio in your book of business because of the experience mod, which we'll touch on shortly. You need to balance your book with these size businesses as it becomes more competitive and profitable for you. Medium-sized businesses in general incur lower loss ratios, but that's not always the case. Companies of this size do have the potential to have a lot of claims when they grow, especially when there's poor supervision. In addition, this premium range is when their first experience mod is typically assigned. When the experience mod is assigned, they usually end up with a credit, resulting in premium savings. For those who need a refresher, anything above 100% is a debit and below 100% is a credit. Since the claims activity seems to be more stable in the range of $15,000 to $50,000 in premium more often than not, the experience mod is on the lower end. While medium-sized businesses incur a lower loss ratio, I do want to mention it's really important to keep an eye out on the insured's claims activity, and we encourage brokers to order loss runs at any time throughout the policy. Since claims are reported directly from the insured to the carrier, your agency is not going to be notified that a claim occurred, and nobody likes surprises at the time of the renewal. Although middle-sized businesses require more work than a small submission, they're not as much of a headache compared to the larger accounts. So you're typically not going to see non-renewal notices, which can occur due to either a class of business no longer being written by the carrier or a major debit on the policy due to the experience mod. That's something that you would then have to explain to the insured. So I want to talk about some target middle-sized classes. It's important to be smart about writing any coverage, but focus on the businesses that are doing well. And here are some of those middle-sized businesses I've found to be stable and competitively priced. Just like small businesses, knowing your markets well does help ease the quoting process as you know which ones to take the risk to. But some of those that I've seen as of late are bars and taverns, restaurants, schools, hotels and motels, property management, apartment and condo operations. So we're going to move into our medium-sized business case study. Writing middle-sized businesses are imperative to effectively compete in the workers' comp arena. Again, I'm walking through those highlighted factors that are important when quoting a risk. So this business is a property management company in California with one location. They are a corporation, so I would check on the California Secretary of State just to confirm the owners of the business. Their payroll is around $635,000 with 14 employees, resulting in a premium of $32,000. So the payroll, you'll see there's two class codes, 8740 and 9015. Property management companies have an array of classification options. They can fall under 8740, 9011, and 9015. So an important question I would ask when receiving this submission is what the business is actually managing. Is it commercial properties? Is it apartment or condo complexes? Or is it individual apartment or condo units? It's important to know what the exposure is managing so you can classify it correctly. For this management company, they oversee individual apartment and condo units, so 9015 would be the correct classification for all its employees outside of the property management supervisors. Property management supervisors are classified differently under the 8740 class. I do want to say it's really painful on the insured's premium if employees are classified incorrectly, as the rate for 8740 is much lower. So you want to make sure you have a really good understanding of the risk operations and you're getting the correct information from the insured. So I'm looking at all the key factors as I would the small business risk. However, I am reviewing the risk summary in more depth as there are claims and this is experience mod rated. We talked about small businesses where there's no negotiation in premium. Well, with middle-sized businesses, discount credits can be applied given the overall quality of the risk, taking into consideration payroll, years in business, claims history, and the experience mod. So always see what's available to your insured when quoting a medium-sized risk. As I mentioned before, middle-sized businesses usually have a experience mod under 100%, and our case study is rated at 96. So they are receiving a credit, but it is almost to 100. So I would definitely recommend keeping tabs if you have an insured like this, because they do have two claims resulting in $15,000. The WCIRB is the one who determines and assigns experience mods, and they do this by comparing the losses and claims of one company to all other companies in the same industry that are in a similar size. So for our example, based off Vista Property Management payroll and claims history, the business does qualify for an experience mod rating. From review of the submission to quoting with the carrier, we were able to bind the risk on the third day. Um, I do see there is a question in the chat. Someone had asked what experience mods can you consider and how high. With our specific markets, we do have carriers who will look at risk with mods upwards of 200%. That is to say, they would need an in-depth summary of what the insured is looking to do to resolve this. Loss control services would most likely be required from the insured, but it is something that our carriers are willing to work with. Before we move forward, I do want to mention that property management operations often utilize subcontractors. So to ensure subcontractor payroll is not included in the final audit, make sure that insureds are collecting certificates of insurance from the subcontractors that show they have their own workers' compensation insurance. Otherwise, the subcontractor payroll will be included in the final audit. I see this at least once a week with our insureds who are being audited, and they are blindsided when they end up owing thousands of dollars in premium to the carrier. Insureds are often unaware of this requirement when hiring subs, so it's extremely important to bring up when you're communicating with the insured throughout the policy term. So we're going to move forward now into some strategies for larger sized businesses. Now that we've discussed the importance of small and middle businesses, we're going to talk about the big fish, your large businesses. These are essential to building a competitive workers' comp book as they add fast production volume. However, you need to keep in mind that it's one large policy you can easily lose in a year's time. So seeking out large businesses will be more challenging not only for new business, but also for renewal, as there is a lot of competition with this size of premium. Excuse me, a lot more strategic planning goes into larger businesses because even when you have the account, you have to be thinking about the renewal term a few months out, making sure you're quoting the business with other markets in order to obtain the most competitive premium, because if you're not, you can guarantee that another broker is. I want to bring up an example. We recently had a policy that was upwards of $250,000 in premium come up for renewal. We had renewed this policy for many years, so we were really familiar with the risk, and we, as normally about 2 months out, go to market to find the most competitive premium for them. Due to their claims activity and experience mod, which was 176%, we were limited in our carrier options. However, we were able to propose a very competitive renewal with one of our carriers. And as we were working with our retail agent on securing the renewal, it actually came up that they were unaware the contact person at the insured's level had changed, and no one from their agency had a relationship with that person. Because the agency didn't know enough about the risk and they weren't speaking to the right person, this policy slipped through the cracks and the account was lost. This is a perfect example of how quickly you can lose a large business policy if you don't have a strong relationship with the insured and you aren't on top of the details of the risk. You're going to have far less of these policies, but you'll need to pay more attention to them than any other. Large businesses are going to be those risks over $50,000. Your businesses that qualify as larger accounts are the ones with greater exposures, more accidental exposure, and higher rated class codes. Businesses such as contracting, manufacturing are some of those larger businesses because they have multiple locations, higher payroll, or multi state exposures. As you become more qualified, you'll begin to attract large size businesses, and I can help you find them. During COVID, we saw the workers' comp industry manage to get through unscathed. However, coming out of that, we are starting to see the carriers tightening with risks that have a poor loss history, and it's showing painfully so in the insured's experience mod. One strategy for larger businesses is implementing carrier services such as customized loss control and claims management services. A lot of carriers who are writing big accounts offer these, so I really recommend that you take advantage of them when proposing the quote to the insured. Whether they have claims or not, it is a huge benefit to their business. So many of these large accounts don't even know these services are offered, but it's inevitably going to help the insured's business in avoiding claims activity. For insureds that have a large premium or a high risk exposure, I do recommend, again, signing up for this to mitigate any claims, as all carriers who don't see a turnaround in losses are likely going to be declined. So each of our carriers has their own guidelines for quoting high experience mod. As I mentioned with the question in the chat, we can see quoting upwards of 200%. I do want to mention, though, it will show in the insured's premium, so utilizing the carrier's claims management services is a great idea in order to turn the problem around. Before we get into our large business case study, I do want to mention a few classes of business that have competitive rates right now. These are manufacturing, landscaping, contractors, painting. The contracting market is opening up, so more carriers are wanting to write these types of businesses when quality. So we are seeing competitive rates applied. We're going to walk through this large size business case study. This is a manufacturing exposure with 2 locations in Los Angeles. So both locations would need to be listed on the application with payroll broken out at each location. They have just under 40 employees, about $875,000 in payroll under Class 2501, which is clothing manufacturing. Since this is a larger risk, I would ask that a supplemental application be submitted as well. Manufacturing risks require further underwriting review from the carrier, and additional information about the risk is important to see if the insured meets the underwriting guidelines and can potentially qualify for credits. Some questions I would ask is all machinery and equipment properly guarded? Are there any material handling exposures? Is PPE provided and required? How often are machine facility inspections? These types of questions are going to be asked by the underwriter when reviewing the risk. They'll also be on the supplemental application for the insured to answer. So it's helpful that I have all the information up front to quicken the quoting to bind time. We're going to move to the review of the risk. And what stands out to me is the 141% experience mod. This means that the business will be receiving a 41% debit on the policy. So I would be requesting physical loss runs for at least the past 5 years to review the claims they've incurred. So as I'm reviewing the claims history, they have incurred over $100,000 in losses, and 4 claims are still open. An experience mod is a rolling figure, so it may continue to increase as long as the claims are still open. That's why it's important the insured utilize control carrier services, and that can be your competitive edge to mention when presenting the quote to the insured. I would be looking for information on the claims to whether the injured employees are still working for the business, if the insured has implemented any safety training or measurements since the claims occurred, and what does their supervision look like within the business. These are going to be things the carrier will ask for businesses that have a lot of claims activity. so it saves time getting in front of the questions you know are coming. Since the insured has been with two carriers, I would want to know, is this carrier or insured initiated? Were they non renewed or canceled by the carrier? Or is the insured moving at each renewal to a different carrier based on the premium amount? If it is insured initiated, it's something to remember at the renewal, as the insured has a history of quoting and moving their policy to other markets each year. As I mentioned before, you want to get in front of that before another agent beats you to it. So after reviewing the loss history, the experience mod, and the Accord 130, I submitted the risk to my markets that are doing well within the manufacturing exposures, and I was able to quote and bind the policy within 5 days. I do see a question. Do you offer risk management, or does the carrier offer at what premium level? So the carrier is going to be the one who offers the risk management services. A lot of the carriers we work with offer that to insureds. At the premium level, it definitely depends based on the claims activity. I've seen it offered at 50, 60,000. I've seen it offered at 250,000. So it would need to be reviewed by the claim services within the carrier. But we do have a lot of carriers who offer that. So I'm going to hand it back over to Anae.
Okay, that was great information, Darby. Thank you. So just a few takeaways from what Darby has been talking about is that small businesses will make up the biggest PIF, policy in force portion of your workers' comp book, but they will produce less premium volume. So it's always important to remember that going after those medium-sized businesses are essential to building your workers' comp premium volume. And then the large workers' comp accounts will generate higher commission revenues. So there's the combination of the three of them is really can make a successful workers' comp book both profitable and stable with good retention. Remember, step back and take a helicopter view of your workers' comp book. That's the best way to build a book of business insurance. Thank you all for joining us.
I do see one additional question in the chat. It says, what's the easiest method to determine the writing code? I utilize two websites, which I can have Jacob link when he sends the webinar out, is the WCIRB for all California risks and the NCCI for all other states. I just wanted to mention that really quickly.
No, that's a great point. And if they have a question or having trouble finding the right code, they can certainly contact you, Darby, correct?
Yeah, definitely.
Okay. And again, I want to thank you all for joining us. Please visit our website for those that are new to us. We have lots of tools that will help you with your quoting process and marketing, and lots of educational material, lots of webinars to watch. And then contact Darby. Let's get started working with Darby at darby@cidinsurance.com. And then there is her direct line, so you can jot that down. Jacob will be sending out a follow-up, and it will give you her information again as well. And we're ready to start. Darby's ready to start writing workers' comp for you today. So thank you so much for joining us.
Thank you.
Thank you.